So we got breaking news out of Washington last night. The Trump administration just instructed its representatives to buy $200 billion in bonds. Those are mortgage bonds. It's in an effort to push down mortgage rates. But what's the problem behind all this? Well, who's going to buy these things? How does it lower rates? And how long is it going to last? And most important, will it work? So that's what we're going to talk about in today's video. So let's break it down, because this move could create temporary rate relief for homeowners and home buyers out there. And it could be probably in most cases temporary. So this headline sounds huge when it comes to $200 billion, but it's not QE like a lot of people might think, because this is targeted at basically mortgage rates. So the president, he can't force the Federal Reserve to buy these bonds. So he's going to force probably Fannie Mae, Freddie Mac, and maybe Ginnie Mae to buy these things. So if this sounds like it's a lot of money, well, during COVID, the Federal Reserve bought $1.3 billion in bonds. We're buying about $40 to $50 billion a month. So $200 billion, that's about a 4-month supply. So what's this going to do for mortgage rates? I'm glad if you joined me today, because we're going to talk about what this is going to do for mortgage rates, the whys behind it. I didn't even pull up my rate sheets, folks, because these will change today. So let's bring up rates, because if you're watching me, this is why you're here. So let's break this down. And I'm glad you guys joined me today, because a lot of people are not going to understand this, and they're going to get the news too late. So I'm going to show you instant reactions to what we saw last night, and then what I think this is going to do. So let's get over to it. Folks, my name is Dan Frio. If you're here, you probably know. So I'm actually a mortgage loan officer licensed in all 50 states as well as Puerto Rico. So that's why I do this. Let's get over to the news. So the biggest news we had yesterday was this. Well, let's look at what we had for this week. And this is what I wanted to do, or why I wanted to do a live event, because I need you guys to ask questions, because we got a lot of people asking questions, and you're most likely going to have questions, maybe not on this, but the Trump administration, they come out with $200 billion in bonds. I'm going to talk about that in a second. Remember just the other day, he came out and said, well, if you're a big corporation, you can't buy single family homes. So between this and mortgage rates, and then one other piece of the pie, we got these tariffs. The tariffs are hitting the Supreme Court today. I don't know if they're going to rule on this. Some people say yes, some people say no. They're going to hear it. So we're going to get final results. If we do, I'll make sure I come out and do a special event on that. So let's look at all this stuff. The Supreme Court's looking at tariffs, how that's going to affect rates, the single family housing stuff, what he's doing here. It's great. It's great incentives. And then over through here, the last piece of this puzzle, he's trying to buy bonds to bring down rates. Let me give you all of this caption in just one little, let's go over to here. I put this together just so you understand how this comes into complexity with this. Okay, so the first thing we got to know is what this is going to do to the bond market. So the first thing I saw yesterday, here's what this does to the bond market. So if you don't understand this, let me walk you through what's happening. So mortgage rates are controlled by this thing right through here. Okay, it's a mortgage bond. So what happened back in 2020, in those times, the Federal Reserve, the Fed, came in and they did what's called quantitative easing. They came in and started buying up bonds. They started buying up Treasury bonds, and they started buying up mortgage bonds. And that's why mortgage rates, or how mortgage rates got to like 2%. Because the more you buy these things, what happens to anything? The more you buy of it, the prices go up. Okay, so in bonds, if the prices go up, that means rates are coming down. Let me explain to the newbies out there. If you've watched my channel several times, bear with me, but I'm going to show you how if the price of a bond goes up, how the yield comes down. Okay, so let's make this as simple as I can. The face value of a bond, let's say in this case, it's a mortgage bond, is $100. Okay, so when you have it at maturity, you're holding this bond. When you trade it in, when it comes to maturity, you're going to get $100 back. Okay, so here's how this works. Let's say you pay a low price for this. So let's say you pay $50. So I gave you $50 a couple of years ago. You gave me the bond, and now today the bond matures. So I give you my bond and you give me $100. Okay, so I gave you $50. You gave me $100 back because that's maturity. I doubled my money, went from $50 to $100. Okay, so that's a low price. We're seeing a low price. Sorry, I got a reversed mirror here. So now let's drive up that price, and I'll say, make it simple, I'll pay you $100. Okay, so for a $100 bond, doesn't make sense. But a couple of years ago, I gave you $100. Today's maturity, I give you the bond back. You give me my $100 back. What's my yield? Zero. I didn't make any money. So you see how if the price of a bond goes up, the yield or the rate comes down. Well, this is a mortgage bond. So if the price of this goes up, well, rates are going to come down. So here's what happened last night. You got to see this. Last night, when the administration came out and said, we're going to buy $200 billion in mortgage bonds, the market skyrocketed. And now you're starting to see it kind of reprieve from here. So let me kind of go over what this could possibly do. And here's my thoughts behind this. So let's get over to this. So they're going to spend $200 billion. Well, during COVID, they were spending $40 billion a month. Okay, so that means there's about a 4 or 5 month supply of this. Okay, so is this going to help mortgage rates? Yeah, for maybe a little bit of time, and I'll show you the charts here. I don't really know what this is going to do because nobody's really buying yet. It's just rumors of buying. But so if you look at this and say, okay, during COVID, the Fed spent $1.3 trillion on this stuff, and now that we're going to spend 200 billion. So if you equate it out, it's going to give us about a 4-month reprieve. So if you're out there, please go to my website, plug in your information right now into RateWatch 2.0. Let me know what interest rate you'd like to refinance, and we'll reach you when those rates hit there. We have hundreds triggering today. So you're probably going to get an email from us today. It might be a generic one. Please reach out to us so we can go through the numbers. I'm also going to give you some calculators here. So check out that stuff over there. But it's probably going to be a temporary reprieve. But here's my thinking behind this, and just bear with me on this one. It's going to give us about a 4-month reprieve, say, or 5-month reprieve. Well, let's look at it this way. The Federal Reserve, let's look at where he's going with this. The Federal Reserve chairman's going to basically retire. His term's up in May. We have another Fed official. He's going to take an early retirement next month. So by May, June, we're going to have a whole new cast of characters at the Fed. They'll probably start cutting rates, right? Well, this might give us reprieve between now and when we have new Fed members, 4 months. So this is a reprieve for 4 months. So is that the tactic here? I don't know. It might be another rumor mill, because we also had rumors down the pike saying, okay, maybe we can do a 50-year mortgage. And I was actually on News Nation and things like that for that. And then they come out and said there could be a portable. So is this a ploy, or is this really going to come to fruition? So that's what we have to look at. So let's break it down this way. Is this going to come into effect? Yeah, hopefully. But is it going to help people long term? No. It's going to help people short term. So if you own a house now, please put in your information in there. If you're buying a house now, I'm not trying to rush you, but maybe try to start looking a little bit quicker, because this might be short run. But then we have the new Fed members coming down the pike. We'll get to that in a second. So then let me look at this piece over here. Trump administration bans large institutions from buying homes. Now, this is going to help some areas. It's not going to do anything for other areas because we have a housing shortage. Okay, so this is more, stuff. There was comments on CNBC this morning when I was watching all the news coming out on the economic news today. That's what we got to go over next, because remember we were told, mortgage rates are going to spike, tariffs are terrible, it's going to inflate, inflation's going to skyrocket, the jobs reports are going to crumble the markets, and I kept saying, hold on, folks, it's not going to be that bad. And what are we coming to a year later? Well, I'm going to come up with my mortgage rate forecast. It just got edited. I don't think this is really going to change my outlook for the longer run. It might for the first few months, but this is another area that we saw. In what they were saying on CNBC, I think at least the administration is starting to throw a bunch of spaghetti against the wall, see what sticks. At least they're trying. Well, that was the comments from CNBC. So then you go over to this, and the Supreme Court's ruling on tariffs. Now, here's a little bit of twist that I have on tariffs, because previously I said once they deem these illegal, and I think they're not going to come back carte blanche and just say, okay, everything's legal. But what I think is going to happen is they're going to come in and put in some guardrails. Those guardrails are already going to have a plan B by the administration. So between all this, yeah, the tariffs might be deemed illegal or legal or whatever, but at least here's what everybody's telling us on Wall Street and the bond market. This is going to give clarity to the bond market. Where are things going to go with tariffs? At least we're going to have guardrails to say, okay, we have limitations. That might be a reprieve for the bond market. There will be maybe some refunding and things like that would need to take place, but I think a plan B is going to be a great resolution to all these. So now my thoughts are with tariffs, it might not be a bad thing because of those guardrails. And I never thought of it that way. So I'll get to your questions here in a second, but let's get over to the bond market. So here's what happened. Now you're seeing it's basically coming right back down to where we were. So is this just a blink? It might be. So last night we had a reprieve up like 20 something points. But are we going to come back down all the way back down to where we were? Well, I don't know. So that's what we're going to continue to monitor throughout the day. So let's get over to the other piece of the puzzle that we have, the economic calendar for today. So let's start looking at this in snapshots. So we go over here every day and we look, okay, the Federal Reserve, what are they going to do? They're going to meet in 19 days. Now, this is some shocking numbers. But in 19 days, the Federal Reserve is going to come in and they're going to come in and they're looking at this data and they're saying this, okay, the PCE inflation, we know it's higher because of tariffs. But with the Supreme Court ruling today, maybe this is going to put some guardrails on inflation. So we're not so worried about that. And then we had the unemployment rate actually dropping today, dropping from 4.6 to 4.4. So now they're looking at this saying, okay, the unemployment numbers they're not looking great, but we don't have a massive reduction in the work staff like a lot of people were predicting. A lot of people, if you notice it, what do you usually click on a daily basis? You know, the stock market's crashing and this is crashing. And I'm excited you guys are here because you're actually trying to learn something. So take this out to your clients. If you're a realtor, now you understand a little bit more about this, but we have more to go to, especially if you're a loan officer. Hopefully today now, when your clients call you and say, okay, what's this going to do for rates? Show them this chart or actually show them the video and they can understand a little bit more. But here's another thing that's coming. The GDP behind my head. This thing is skyrocketing. So if you look at the economy in general, the Federal Reserve is going to say, okay, we got inflation, not so bad. It didn't even hit 3% like we thought it was going to be. The unemployment rate, anything under 5 is full employment. It went from 4.6 to 4.4. So it's going in a better direction. And then you have GDP that's skyrocketing. So if you're on the Federal Reserve, are you cutting rates? Well, let's get over and see what they're thinking. So this is the CME group, and I'm just trying to give you tools, folks, just tools to help you out if you're a homeowner, home buyer, realtor, loan officer. Down through here, it's gonna say the Federal Reserve is gonna do what in the next 19 days? Well, they're gonna do 95% chance. Now there's a 95% chance, folks, they're not gonna cut rates. So maybe this is a ploy by the president to say, okay, Fed, you're not going to cut rates over here, but give us some help somewhere. So maybe is this information that we've been given, is it just rumor mill? So let's kind of retract back to where we were. So the Trump administration came in with this. Now let's break it down. Who's going to buy this stuff? It's going to be Fannie Mae, Freddie Mac, and Ginnie Mae. They can do it, and I think he has the authority to do that. It's not going to be the Federal Reserve, so it's not going to be QE2 like a lot of people think. It's going to be just targeted at mortgage rates. But is it actually going to come through? He can't mandate these things that I know of, and he can't mandate the Federal Reserve to do that. So mortgage rates, I'm thinking this might be a little bit of a bump or whatever, but if you're a homeowner out there, take advantage of it. Check that. You're looking at housing. This is unless you're in one of those huge, you're downtown New York or something like that, or Arizona and Texas, you guys see this stuff, but in most parts of the country, you don't see institutions coming in buying up neighborhoods. And then the biggest thing right now is what the Supreme Court's going to deem maybe later this afternoon. So that's the thought behind there. Let's go back and see where the markets are. It's only up 0.1 now. I got some more to go through, but before we end, I'll end at this chart right through here to show you guys where basically where the bond market's going for the day. So again, let's go over to the economic news we got today. And this is that area where I'm like, okay, so many people, and I won't go back to those crasher people and all that, because here's what I want you guys to do. I put out my housing forecast last week. If you didn't see it, find it through here. Just grade it for me. Just scroll down to the bottom. I don't care if you hurt my feelings or not. Give me a grade. Go back last year's too. Let me know, what I predicted. How did we do? And then this year, I'm basically predicting the same thing. So my interest rate forecast, that'll be out on Tuesday. You'll get an email if you're on our list. If not, I'll be posting that on live. But let's get over to the economic news we had today. And this is where we're going to finish out the week. So we have average hourly earnings up from 0.2 to 0.3. So if you're working, you're making more money there. Average hourly earnings year over year was 3.6 raises. If you stayed on your job, you got 3.6. I thought yesterday it was like 4.4, but you got a raise to 3.8. You might disagree. Go complain to your boss on this one. Building permits went from 1.3 to 1.4. That's good news. Housing starts -8 to a +1. Good news. Housing starts 1.3 million to 1.3. Okay, right in line. Here's what we're looking at. Now we got non-farm payroll. 56,000 was the last reading. This was actually revised a little bit. They expected it to come in at 66. It came in at 50. Most analysts say if long as we're sticking at 50,000 in job growth per month, it's okay. We're not expanding, but we're not retracting. And that comes into play right through here. Participation rate up a little bit. Non-farm payroll. Well, this is December number. It gets a little bit confusing, but the last reading is 50,000. Unemployment rate, that's where we saw it ticking from 4.5. They revised this to 4.4. I think yesterday we did get the Fed's look at this GDP number. The Atlanta Fed's GDP last reading was 2.7. It doubled. Well, maybe not doubled. Yeah, it doubled. So it doubled to 5.4. So again, let's go back to one more time. I don't mean to keep beating this dead horse on the head, but if you're sitting on the Federal Reserve, what are you doing? Are you cutting rates into an economy that inflation's not as bad? It's above 2. You got the unemployment numbers. Actually, employment's per the numbers and per payroll getting better. And then you have GDP just killing it. So it's a good economy. I know the mainstream media doesn't want to paint that kind of picture, but that's what we're seeing in the economics of things. And that's why I'm agreeing with the K-shaped recovery. I see it every day. Those that have money, you're killing it. Those that don't have money, you're getting killed. So let's get over to see if we have any questions out there. If you guys do, I'd love to answer, and I think there's a lot of them. So my apologies. Let's get to some questions that we have. So the first one is closing on a new build in February. Rates need to be locked in by Friday. Should I call them in? Because here's what we got. We got this bond market. Let me go through this with you real quick. Here's the last 2 days. So yesterday, right when the administration announced this, so I hope you understand what we're looking at. Okay, so again, what you're looking at on this screen is if this number goes up, the chart goes up, think of it as a stock. You're doing well. That means mortgage rates are going down. This is what we saw last night and this morning. Now we're giving it all back. So call them fast and make sure you lock in now, because we're getting triggers like by the hundreds right now of this. So by the time we reach out to you, it might already be gone, because it was only, I don't even know if banks are going to repost this morning because of the volatility. So a lot of banks might just say, okay, we're just going to stick with last night's rates because we don't really know where the bond market's going to go today. So, call your broker. There's no other better opportunity right now than lock in, but we might be all the way back to square zero. But you did have that little reprieve last night. So let's see if you got or lock later today. Potentially you take, no, just call them as quick as you can. That would be my advice there. How long do you think, how low do you think they might come in? Let's go here. Here's what, great question. I did this analysis over here, and this is, I hope it followed through. No, shoot. I did one analysis yesterday, and there was 2 outcomes. Let me get back to this. Let's just go back to here. There's 2 outcomes of this that really came through. It said, it depends on the participation rate, kind of like what we were saying. Who's going to buy this stuff? So is it Fannie Mae? Is it Freddie Mac? Is it Ginnie Mae? Are institutional buyers going to come in? So if you have a massive amount of people coming in, other than the people that might be forced to buy this stuff, you might have a nice rally into this and so forth. But there's no reason for this to be long-lived, So it's like, starving yourself for 2-3 days. Yeah, you lost weight, but then you're going to eat the next day and gain it back. So it's like it'll help you for short terms, but if you're looking right now, lock in right now. And if you're working with us, call us, email me. The RateWatch, it's triggering folks, and I showed you guys. If you're a homeowner, put in your information at our website right through here. If you're a homeowner, go to our website and put in your mortgage information in RateWatch 2.0. We'll monitor rates for you for things like this. But unfortunately, when it triggers like this, our system triggers in the morning, scans our list, provides me a list of everybody in that data file, and you're going to get automated emails today. Most likely I might turn those off because everybody's going to get them and it's going to be false data. But reach out to us if you filled out your information and let us go through the numbers. But if you're a homeowner, let me get to the news here in a second. But folks, let me just get you some tools out here. The markets are like in this right through here. But if you're a homeowner right now, should you refinance? payments. Well, let me just give you two tools. One tool is if you go to our website and just go to calculators we use in videos, you're going to get this. And I think this is one I did. No, you can just go through here, plug in your information, and it'll tell you over here how much a reduction in your payment you're going to get, and what your break even point is going to be. I even have one through here, and you have to go at the bottom of our page right through here, and which you have. Shoot, hold on. Again, got it. What you have to do is down below, use the code DAN, DAN, capital letters. You don't have to pay for this thing. You can go to, I think it's Gumroad, and you can actually download this data. Okay. What this does, it's pretty cool. My son built this. It goes in and tells you, well, rates are going to drop next year, maybe a little bit. Does it make sense to wait? Okay, so you fill out all your information, and it'll just explain it to you on how to do that. So I don't need to do it for you. You guys can do that on your own over through there. So that's some tools to lock at. I'll go over my lock or float scenario here in a second, but let's get back to your question. So my apologies about that. How low do I think they're going to go? Most analysts are saying maybe an eighth to a quarter. So that might fit in range to where my predictions were. So my predictions, to just give you a sneak peek of what's coming next week, is my rates are 5.875 to 6.25. And we've been teetering at the 6.25 for a while now. This is going to, hopefully this little rally today is going to take us off of that. But I'm still saying that's where we're going to be. So this could bring us down into the 5.99-ish range or something like that. But a lot of people right now, believe it or not, if you're out there, a lot of people are waiting for a 6% rate to hit, or 5.99. If you actually call in and give us your information, a lot of people do qualify for that. So when you fill out the RateWatch tool, we're scanning that data, but it really doesn't give us all the fine-tuned numbers. So check out that. But my estimates are this might pull an eighth off of rates today, and then it depends on if institutional buyers will be jumping in from there. So next question is, I think this will be a bottom of rates. Genuinely, whatever movement takes place today is going to be for the year. You might just be right there, because remember, I come in each day and I'm like, what is the catalyst to actually move these things lower? And we just went over all the economic news. We went through the economic data. So today, what do we get? Pretty darn good news on all these fronts. So, again, if you're on the Federal Reserve's member, what are you doing? Okay, so now let's scroll over. What are the other markets doing for this? So how's the Dow Jones, the equity markets faring on this? Because how does this affect them? Well, usually good news like this is, I don't know, it's hard to explain. But today, really, with, I guess, the positive news from the economy when it comes to the jobs report and everything else, you look across the board through here, Dow Jones, the S&P, NASDAQ, all up, oil's up. And oil, I talk about oil every day. And if you guys have any questions about that, let me know. But we talk about oil every day because oil is a huge piece of our inflation numbers. Think of it, how everything gets everywhere, how most things are produced. You might not like it or not, but it's just the truth. So oil below $60 a barrel is helping inflation huge. If we had oil still at $85 a barrel, I can guarantee you the inflation number that the Federal Reserve monitors, this thing would be way over 3%. One of the things I keep saying is this is a catalyst that's going to keep us down there. Okay, the U.S. Treasuries, it's up 0.1. CNBC and Rick Santelli tells us every day, this number needs to stay at, below 4.2, and it keeps teetering right through there. So that's my thoughts through there. So the equity markets, they're going to fare on this as well, but it was a choppy week, folks. So that's what I thought I would just come in and explain to you guys, what's going on with these. I'm not going to do my thing, but you're hearing all this. So the first thing your clients are going to be, if you're a realtor or loan officer, I know we're going to get bombarded today, is, okay, this is going to help rates, right? And this is going to drop, and mainstream media is not going to really know what they're talking about. So now you understand a little bit more about what the heck's going on with those and why. I got you there. So let's get to the last piece of the puzzle. What should you do if you're looking to lock or float? I'm locking as fast as I can right now if I'm you guys, because if I saw this number over here keep moving up or staying steady, I'm saying just float. But this is giving all the numbers back. It's like your stock opened up huge, And now people are selling and selling and selling and selling, and you're like, okay, what do I do? Lock in. That's what I'm telling you right now. So if you're with us, lock in. If you're not with us, I got some tools for you. But if your rate is over 7, please call us. Please call us. If you're not closing for over 30 days or more, just float, because I think this is going to be a little blip in the radar. Subscribe over there. So every day I post a video, you can learn, at least get an idea of what's going on. So let's get back to any other questions that we have. Let's see. What do we do? I called since they only changed at 10 a.m. Lender thinks it won't change them. That's what I was saying. We're giving back. Thanks for listening to me. So now you understand the markets a little bit. You know I'm not full of shit at this point, because I just told you exactly what's going to happen, what's most likely happen. And I'm showing you right on the screen exactly what's happening. So if you're out there and you want to figure out, does this help me out, folks, please reach out to us. We'd love to help you right through here. We got all kind of tools. If you've already locked in, say, and you're saying, okay, Dan, these rates, I know they're moving. Can they help me a little bit? Well, we have a loan estimate review thing right there here. Right here. What we can do is, I'm not trying to steal business from you guys out there. So if you're a loan officer, I'm not trying to steal your business, but you guys know those companies out there just hose our clients, especially VA clients. If you're out there and you're like, okay, Dan, can you check and see if I'm getting a good deal? Let me explain to you guys what I do. So my name is Dan Frio. I've been doing this. I'll give you a little bit of background about me. I'm a graduate of West Virginia University. With a degree in economics. I grew up in a little steel mill coal mine town in West Virginia. I was the only person to graduate college in my family, and I had these aspirations. I'm going to move to Chicago and make something. I want to get in the bond market and trading and things like that. So I moved up. I had $3,000. I bought a car, moved to Chicago, and I was blessed for a family to let me live with them for about 6 months. I found a job, flew back, gotten married to my high school sweetheart that I've been married to since I've been 22 years old, and I'm 60. And then I started in the mortgage business, and that's what brought me here today. I was on Christian radio for 15 years, just talking about financing and real estate. So I came to this part of my life where, okay, I want to educate people and really make a difference. So I found this bank, and this bank is licensed in all 50 states as well as Puerto Rico. So if you're out there anywhere in the country, I'd love to help you. I've been doing this for over 35 years. The slogan we have is this: one application, one credit pool. We're going to compare your loan to over 30 lenders. And the reason why I'm here is that because when my clients call me, heck, I'm the rate update. So I have to have good rates, good fees, and we have to know what we're doing. So the bank that I'm at, they're big. Well, you probably haven't even heard of us, but here's what we do. We've set up ourselves with over 30 different companies. These are mortgage companies, credit unions, other lenders. So when you call in, we're going to get you approved. You'll work with me and my team directly, this whole process, from application to keys in your hand. But we have programs that we can use from other banks. And even what we do is we scan rates, and we showed you, each Wednesday, Alan and I, we have check our videos. Each Wednesday we come in and basically show you behind the scenes how we do it. And that's what we do. So I can use rates, programs, and everything from over 30. I think there's like 35, 37 different lenders that we have right now. These are for investor loans like DSCRs. You don't understand what those are. Watch some of my videos. I got over 6,000. And thanks to you guys, we just hit 40,000 subscribers 2 days ago. I was watching a movie with my wife, and bling, 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 I get an alert, and we hit 40,000 subscribers. So thanks to you guys. So let's get to some more questions, but that's a little bit about me. I love doing this. I love educating you guys. And our goal here is to help you guys out, no matter where you're in the country. I don't care if you're looking to refinance, you're looking to buy, maybe even need a reverse mortgage. We'd love to help you. So let's get to one more question that we have. It says, my fiance and I are closing March or early April. Feel like we might be in a pretty good situation right now coming up to, you are. So keep watching. Here's the best bang for your buck if you're out there looking to lock in your rate. Okay, so we monitor rates every day. Okay, but how they really work behind the scenes is that rate over there. Who's it for? What is it? What criteria is it? But the one thing I want you to understand is that is on a 30-day lock. Okay, so let me explain to you how mortgage rates work. There's a whole bunch of pieces of puzzle, and I had this ingenious saying yesterday. Let me think of it. If you're out there, if you're a homeowner, home buyer, you're out there shopping mortgage rates. You're not really comparing rates when you're out there shopping. You're actually getting an option like one option at a time. Here's what I mean. Let's say you called somebody and you're like, okay, we'll pick on Sheer Daddy. Sheer Daddy, you just called your lender. I don't even know where I'm going. Rates are all over the board. Here, let me get to this final line. Is when you're looking at rates, a 30-day lock is in your best interest. Anytime you go over 30 days, the rate gets a little bit higher. It's one of the pieces of the puzzle that calculates out your rate. So what really goes into your rate? Your credit score. That's one of the biggest pieces of the puzzle that you have. Because if you don't have a 620 credit score or higher, you didn't qualify for half the programs. Okay. So the credit score is huge. And like I said, we do that every Wednesday. Alan and I come in and we show you how all these things affect you. But your credit score is number one. How much money you put down on the property, which is called your loan to value. The more money you put down, the less risk it is for the bank. So the better your rate. What kind of property is it? Is it a single family home, which is probably the best rate out there? Is it a condo? Rate might be a little bit higher. Is it a 4-unit building? That's risky for investors and the bank. So those rates might get a little bit higher. So rates, there is no one rate fits all. It's basically, rates vary by your credit score, your loan amount, your loan to value, and a whole bunch of things like that. Hey, Rick, buddy, I was meaning to call you yesterday or text you. Rick helps. Please check out Rick's channel. Fantastic. He's an educator too. He's a realtor. I'll put it that way. But I reached out to Rick a couple of years ago. He's out in Arizona. Check him out. He's just a good dude. I mean, he just talks the truth. He knows his numbers. He's not trying to sell you on anything. He just helps people out. And that's what I try to do too. And every once in a while, I'll have him on my channel and he'll have me on his. And Rick, I'm starting on Thursdays, real estate roundtables. So shoot me an email after this, buddy. I'd like to get you as the first one on there. Then I'm going to start building out that. So if you're a realtor out there and you want to talk about your area, you have some presence on social media or on the news or something like that, reach out to me. I'd love to post you on our website or give you a shout out on YouTube. Have you show us what kind of homes you're listing, what your market looks like, because I really want to dive into what people's markets are looking like. So, folks, let's get back to the end all beat all. I want to see where the bond market is. We're probably going to stay steady up maybe 5 ticks. So just to give you guys some insight, especially for a Sheer Daddy, last night, what happened is the bond market jumped up about 25 points at the end of the day. Okay, so if we're up 5 ticks from here, it kind of means we're up about 30 ticks from where we were at noon yesterday. So rates should get a little bit better. But the banks might just hold off right now on better rates because the volatility. So then one last question you guys might ask is, how often do banks change their rate? Well, they can change their rate all day long. Let me see if I can find you. Every once in a while, the rates haven't really been moving lately. But when companies change rates, and it could be 2, 3, 4 times a day, I get an alert in this system. And if you're a realtor out there or you're a loan officer out there, check out MBS Live. I have a link down below, I think, or reach out to me. I got a link for you to save some money on that. It's a fantastic system. We're trying to build something like this on our own, but it's just really hard. So that should do it. If you're looking to refinance right now, reach out to us, folks, because this might help you out quite a bit. It might actually tickle you a little bit to say, hey, look at the numbers, because many times when you're breaking down these numbers, especially right through here, check out this calculator we have down below, and make sure you use my code DAN. It's all capital. You get this for free. Let me run you through it real quick. If you owe $450,000 on your house, okay, you have a rate. A lot of people still have rates at, let's say, 7.5. And it was a 360-month loan, which is a 30-year loan. Might cost you about $3,500 to refinance. Just keep that there. Okay, so what I want you to do is scroll down through here. Today's rate is 6.1 or 6. We'll put in 6.2. And you're probably looking for a 30-year term. You can adjust this any way you want. And then over through here, if you wait 12 months, maybe rates will get all the way down to 5.875, maybe. I don't know. How much would it cost you by waiting? Or does it make sense? Well, click the button. What's it's going to do is it's going to scroll down through here and say, well, right now you can save $370 a month. And if you waited, well, you're going to pay that higher rate, that higher interest for the next year. So you're actually going to lose out over $38,000. So by putting it off, are you really saving money? You might be surprised with these numbers. So even if you subscribe to our RateWatch tool, please make sure you use these other tools because maybe you don't need that rate to be back at 2% to save some money. So folks, that's my report for today. I won't be doing a midday or closing bell today unless we have a huge reprieve in these things. So if you see me coming back later today, please watch it because it'll be important news that you need to know if you're a realtor, loan officer, especially if you're a homeowner and home buyer. So folks, that's our report for today. Thank you for taking your morning out and spending it with me. And I hope you learned a little bit something. So I will be out next week with my mortgage rate forecast. I think you already kind of know what that's going to be, but we take a deep dive into that to give you a little more understanding in that and other things. So that is it for today, folks. If you need some help, please reach out to us, especially if you're on the sideline saying, should I refinance or not? This might be a little bit of a itcher out there for people to at least look at the numbers because you might be paying a lot more money than you actually have to be. So thanks for watching. God bless. Have a fantastic weekend, folks. If you need us, we're here. Otherwise, I'll be back Monday morning with the opening bell to let you know what the heck's going on with those and why. Thanks for watching, folks. Have a good